Before we go over the charts on Zillow, we'd like to go over this article. It's coming from Market Beat. Zillow and the 30% opportunity that's opening up. So much of last year, Zillow could have been the poster child for stocks that were pumped and then dumped with the pandemic, a nearly 90% drop from the 2021 all-time high, only bottomed out last October when Zillow shares were back trading at their 2013 levels. For starters, the fundamentals continue to improve. It looks like Zillow has firmly stopped the slide in revenues that underpinned much of last year's drop in share price. They have been rising since the end of last year, with their most recent earnings report from earlier this month confirming the trend. While revenues for their fiscal Q2 were only marginally up on the same quarter last year, they were up 8% on the previous quarter and 15% on the one before. The numbers also exceeded the company's guidance, always a bullish sign, while also once again outperforming those from the broader real estate industry. There's no doubt that the housing market has cooled considerably, and while Zillow remains exposed, it's also showing that it's reasonably well insulated, especially against its peers. The overall theme seems to be one of riding out the housing downturn while maintaining market share and being in a strong position to expand on the latter once things turn again. So this is the MarketSuite's analyst rating. They rate Zillow a moderate buy. So this is one definitely has the feel of a longer term opportunity about it, and that's just fine with us. Even with the shares rally, shares are still trading at the same level they were in 2014. So this one has a ton of room to run. When thinking about the target price to aim for, the upper end of the scale from the 13 buy ratings that MarketBeat has tracked points to a $68 target or 30% upside from current prices. All right, so now let's get into the charts. We're going to start with the monthly chart. And we can see that on the monthly chart, price has gained support. This was back in March. Price came down, touched the 13 simple monthly moving average, and then has been moving up nicely. You also have the moving average also bottoming and then curving up. So that should serve as a macro, bigger dynamic support line. When I look at the price chart, their target is 68. My target is 65. Because you've got these pivots that you can see very clearly. 1, 2, 3, 4, 5. All right. The 68 target that they have would be a couple dollars above, $3 above. All right, let's go down to the weekly chart. Here was a gap that must be on earnings. All right, now price is pulling back to a level of interest, this $48 level. Why? Well, that was previous resistance, becomes support. Also, your moving averages, this is the 13 and the 26 simple weekly moving averages starting to point up. You can see how price, as it's been moving up, has respecting at least the 26. You have gotten penetrations and closed above the 13, but the 26 simple moving weekly average is the line in the sand. All right, so we're going to put, and it appears potentially that price has bounced off of that level here at 48. Let's go down to the daily. All right, so look for a little bit more downside risk. You have the 100-day moving average coming into that resistance support band right now. What I'd like to see is a reversal on strong volume to know that that is a level of interest where buyers stepped in. you want to see something like this type of volume bar, which is above average. So anything above average that's green is an opportunity to go long. Longer term, medium term target would be 65. Shorter term target is going to be 56, or getting back to the most recent highs in that 56, 57 area. So let's see if we can get a bounce. That'll be the play. Thanks for watching. Subscribe, please. Like the video.